Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the TGI. Thank God it's Friday. Hey, what a week. Thank God it's Friday, the 30th of September. 30th of September as well. Just a point of reference on that, guys. End of week, end of month, end of got to just do my counting. October, November, December. Yeah, end of quarter two, right? So we've got end of week, end of month, end of quarter, all happening today. TGI Friday, the 30th of September. So that can sometimes have odd things going on in the market. End of month, end of quarter. You get sometimes rebalancing. Obviously, in the last month and the last quarter, we've had huge moves in markets. Bond markets aggressively lower, stocks fairly aggressively lower, FX markets, dollar surging higher, pound, euro collapsing, yen collapsing lower. So that can often see rebalancing by funds, pension companies, etc., index rebalancing. And that can often see some erratic volatile intraday moves in the markets, particularly around the different fixings we have in FX. We have FX fixings, less so these days than we used to do in the past, but also just generally, if you get a rebalancing, if a fund has to rebalance at month end, quarter end, then you can see some really strong flows for no particular reason other than they're rebalancing. It's just basically supply, good old fashioned supply and demand. More bigger buyers than sellers than there are sellers, more buyers than sellers, the price goes up, and vice versa, right? It's like the old, when I used to work on the trading floor, it was the old cop out for brokers. Why is it going up? Oh, more buyers than sellers, more aggressive buyers than sellers. But on month end, quarter end, that can just literally be the case, right? It can be the case that that you get a big flow coming into the market. You might be sitting there thinking, I'm going to oppose this. It's going to end at some point, and it just goes on and on because it's a month end or quarter end flow, right? And if you get 2 or 3 or 4 or 5 or multiple funds all doing that at the same time, they're kind of chasing the price, and it can have an aggressive impact. I didn't finish my introduction because I got caught on the date. Yeah, TGI Friday the 30th of September, and welcome to the Bull versus Bear webinar with Trade Day Steve Miley on the call. So there's the end of my intro. Punctuated by a little bit of teaching on month end, quarter end. So do watch out for that, guys, today, right? You start seeing these moves. You might see an aggressive move. You're looking for you're looking on the news wires. What's going on? A lot of the time with this is you go with it. But then when it stops, and again, if you're watching the DOM in here, right? In here, when it stops, when the actual order flow stops, when that volume stops coming through, you can see it as it goes through in the futures markets, right? If you see that stop, then often then you get once an order has been filled, once whatever they need to do, buying stocks or selling bonds or whatever they're doing, right? Once that order's completed, then you often get a big retracement. I feel like I'm stating the obvious here, but all of this gets accentuated or can get accentuated at month end and quarter end. And it's also weekend, right? So we're at the end of the week, the end of the month, the end of the quarter on quite a turbulent week with everything that's gone on, particularly driven out of the UK with this kind of carnage. I'm going to focus a little bit on some of the UK stuff that's been coming through today. Ridiculously, we had like year on year, very backward looking numbers in here for GDP. Obviously, look at the second quarter in here, but year on year and quarter way beat expectations in here. 4.4% growth in the second quarter year on year. Surprisingly for the UK, but it's obviously not reflecting the underlying carnage that's going on. We have had some notable data in here as well. Look at this, there's an article out on this Eurozone CPI above expectations, 9.7 expected, 10%, so double figure in the Eurozone as a whole. Month-on-month number was above expectations. I saw the Dutch, so we haven't got the Dutch numbers, we've got like the bigger European numbers in here. You see the French is actually below on the CPI. The German unemployment change was not as bad as expected, so that's a positive. But the Dutch number, I've got the article. I'll come to the article shortly. But was like I think I just saw 7 areas there. I can see it on. I can see here. 1 second. The Dutch number is 17%. Wow. I mean, wow. Dutch inflation leaves a 70 boosted by higher energy prices. Yeah. August jumped to 13.7, 17.1. Unbelievable, right? I'm assuming that was above expectations. We can probably go and have a look on the calendar if I got the filters on here. Yeah, I can add in the Dutch. Where are we? Netherlands should be on the Netherlands. Anyone see that? Gosh, not in alphabetical. Is it in alphabetical order? It is in alphabetical order. Why am I not seeing it then? Oh, it's going across. Oh, I see now. I see why. Okay, LM. Netherlands. There we are, Netherlands. Okay, let's add that one in. And apply. Let's see what the expectations were this morning. Oh, it's not coming up. Even though I've added it in. Oh, there it is. Right there. Dutch retail. Oh, it's only got the retail sales number. Okay. Didn't bring the other number in. Okay, not on there for some reason. Not to worry. I mean, we're not really that focused on the Dutch inflation number, but I just want to show you this is what's happening in Europe, guys. This is the impact. And I know that you guys stateside, I know the energy prices are up there, but compared to what we're seeing over here, right? And we've got a few little things to highlight that in the articles that I've got opened up in here today. Looking ahead now, what do we have? I've already spoken about all of this in here. So important in here is the PCE data. Remember, the Fed tell us it's just in just under 1 hour. Okay, the Fed tell us this is their preferred measure of inflation. This is what they look at. Even so, the CPI number moves markets more still, but the Fed tell us this is what they're watching, right? So we should be watching it too. PCE numbers coming in later today, 0.5 month on month, 4.7 expensive. PCE, personal consumption expenditure. We also got Fed speakers, Barkin, Brainard, Mester, Williams, all coming up today. Actually, further as well, Bowman down here as well. So you've got a lot of Fed speakers. Fed speakers yesterday completely reiterated their hawkish tone, even when prompted about, I can't remember who it was. It wasn't Mester, it was somewhere, I think it might have been Brainard yesterday. But when prompted, actually, I think it's in 5 things. I read it this morning. This is the European version. You get the message. Here it is. Yeah. So look. Hawkish stance in line with the message from Cleveland, Loretta, Mester. So who was it? Bullard. No, sorry, it's Bullard. Emerging Market Forum. Volatility, said, volatility in financial market reflects spillover from recent events in the UK where the new government, so we know all about this, right? So the volatility is coming from the UK, but made clear that these would not cause the Fed to pause its tightening campaign. His hawkish stance was in line with the message from Mester as well, who said that officials are resolute in their quest to increase rates to a level. So despite what we've seen over the past week, despite the turbulence in bond markets, big sell-off in UK gilts, as we know, pulling global bond markets lower prices, higher yields. It's caused all sorts of problems here in the UK and had that contagion effect. We've been speaking about that all week. Into other bond markets, into the FX markets, the pound getting smashed lower to an all-time low, dragging other currencies down with it, like the euro, and the dollar strengthening even more and more and more. We have seen a significant rebound actually more recently in the pound and the euro. I personally think that might have been in the bottom in the pound. I've said to funds that I deal with, I think that we're a classic opportunity. If you've got overseas money, if any of you guys are thinking about buying abroad or investing abroad, now's the time to change. Your dollar is super strong at the moment. Change it up. And one place that's super cheap now relative for you is in the UK. So if you want to come invest in the UK, now's the time to do it. At one point you got close to being able to change, a dollar into a pound. Only a few years ago there was 140, right? So let's see how that plays out. But I think there is a great opportunity to invest in the UK. But nevertheless, so we have seen a rebound in the pound. But let's move on. Let's go back, take a look at the calendar. So PCE is the big focus today, plus all those Fed speakers. I say Brainard, Mester, Williams. Who else are I saying here? Bowman as well, all speaking later today. And then we also get the Michigan Consumer Fed. That's at 10 a.m. Eastern time, so a little bit further away. The real focus is going to be on this PCE data. Personal spending, personal consumption as well comes out at the same time. And Barkin is speaking as well, at the same time. So watching all of those Fed speakers plus that data and the Michigan Fed a little bit later. Quick look at 5 things that I've kind of covered. So the Fed officials yesterday stayed very, very hawkish. The Chancellor and the Conservative Party under fire because of what they've done. A lot of speculation they're going to undo it, right? A lot of speculation. That's helped the pound back higher over the last 24, 36 hours. They've actually been on news programs, basically saying we're running the course, we're going with this, but a lot of speculation that some of this may be undone because of the damage. Meta shrinking. So Meta, aka Facebook, is a hiring freeze and cutting budgets, cutting staff. Ukraine doing well, pushing ahead in eastern Ukraine, and US equity futures in here kind of mixed on the day. US futures pointing higher. Let's have a, so Wall Street was obviously down yesterday. S&P hit another new low. Dow hit another new low. Lowest level of the year, lowest level for 2 years. Down between 2 and 3. Boy, the Dow 1.5. The Nasdaq nearly 3, the S&P over 2%, and getting tech particularly leading on the way down. Apple was a significant casualty yesterday, but then this morning US equity futures rising and bonds rebounding. So there is that correlation in here at the moment. I did pop out an article actually this morning. Let's see if they've got it published in here yet. That I did. So let me have a look first. Here is my stuff here. Let's see if they've published it yet. But there's been a dislocation. Yeah, is the crypto? Yeah, I put this up this morning. So is crypto decoupling from stocks? I know we're not trading crypto here at Trade Day, but I just think it's interesting. We've seen, if you look at Bitcoin, here's the Bitcoin chart put up. Bitcoin's been sideways. If anything, this week it's been slightly up. Now there's obviously been a really high correlation between stock indices, particularly US stock indices, particularly the Nasdaq. The Nasdaq and crypto have been very, very much aligned in here over the past year, certainly on the whole bear market, right? However, crypto has actually been sideways to up in here, where obviously the S&P, the Dow, we're hitting new lows for the year, okay, over the last 24 hours and throughout this week. We've actually been prodding higher in here throughout the week. So interestingly, a bit of a decoupling. When the markets start, we spoke about how highly correlated markets were yesterday, right? This huge correlation. We looked at the chart, the Treasury chart, the gold chart, the oil chart, the Nasdaq chart, the dollar chart, they're all looking like the same chart, right? The dollar's obviously the upside down version, kind of stuff, but they're all looking like the same chart. If you put them onto like a 30-minute chart, they're all looking exactly the same. The price action is the same. There's a massive correlation. You're seeing a decoupling here. Often when you see that decoupling can be a hint, only a hint, a potential signal that the market might, I say, be coming to a significant turning point when you get a decoupling. And maybe crypto's telling us the worst is over, right? Maybe, who knows, right? But it's just something to bear in mind, okay? So what else do we have in here? Let's park that for now. So, Wall Street was down. We bounced this morning, and Treasury is bouncing as well. And the pound has bounced. And again, talk of shock loss on bets for policy revamp. So there's potential that they're going to change the policy, right? It's up 8% from its low, okay? And also we're seeing the UK bond market. There is speculation that maybe the government is coming under political pressure from its own party to water down proposals or cut spending. So we might be seeing a shift. They're not going to probably abandon, right? Politicians, they're not going to turn around and say we got it wrong. But what they'll do is they'll tweak things. So whereas they've increased spending on to help with fuel bills and that kind of stuff, right? They've increased spending there. And they've cut taxes. What they may do now is increase taxes somewhere else. They might cut some spending somewhere else, right? Okay, to allay the markets. Okay, so give with one hand, take away with the other hand, as it were. Okay, so EU backs gas ban. So this is going on, and so there's new kind of further oil price caps. They're still discussing, still trying to limit the benefit that's going to obviously Russia from these higher oil and gas prices. This is just some of these are just interesting that I just saw today, guys. UK is the only G7 economy still smaller than its pre-COVID size, and that's obviously not being helped by the current situation. Okay, but UK averts immediate recession with surprise expansion into Q2. We spoke about that at the beginning, right? So I think if we look in here at the data, we click in, we contracted, yeah. So we had a contraction in the first quarter, minus 0.1. If it had contracted again, okay, if it contracted again, then it would have been obviously a recession. But we actually expanded in the last quarter. What else do we have in there? So we go there. UK gym. So this is reflecting, guys. Again, this just so for you guys who are stateside, just to see how negative things are, how much concern there is regarding the cost of electricity, the cost of energy. UK gyms shutting hot tubs, turning down pool temperatures to save money. Okay, sports centres are a lot of and they're talking like, pubs and bars and restaurants closing because of how high the bills are going to be. Okay. This one is not meant to be here. Should be down that in there. Let's go so futures ed higher. So going from the Reuters article, similar thing in here. Again, we spoke, this was a breaking story from a couple of days ago. Nord Stream leak likely done by a state, says Sweden. Okay, not quite pointing the finger, but then there's let me park that one. Where's the other one on that? We've spoken about that. Where is it? I think it's up here at the end. Yeah, but look, Russian spy chief West was behind sabotage of Nord Stream. Right. Okay. I'm not sure who I'm believing in here, but we'll see. Okay. So what else do we have? Futures edging higher, Nord Stream. Energy crisis sires a new European order. A strong Italy aiding Germany. Germany very, 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 very much dependent on Russian energy. Okay, and so we're seeing a shift in power because Italy less dependent. Eurozone inflation hits record high. We've already spoken about that. Dutch inflation at 17%. We've spoken about that. Investors dump global bond and equities funds on recession risk. And we're going to probably see, and then this is what we're talking about, the month end, the quarter end. Okay. We're seeing global bond and equity funds, massive outflows. Okay. Global bond and equity funds, massive outflows in the week ended September 28th. Okay. So, the week ended September 28th. It's not the week ending September 28th, is it? Today's the 30th. So, okay. But nevertheless, I think they got the date wrong there. But from last week. Yeah. So, that could have a knock-on effect into today's month end, quarter end. Russian spy chief forgot that. And where are we this morning? Well, we've already seen we were down depending on the index, between 1.5% and 3% yesterday. 1.5% for the Dow, 2% for the S&P, 3% for nearly 3% for the Nasdaq. Dead cat bounces, I would argue, this morning. Third up for the Nasdaq, about the same for the Dow and the S&P. So dead cat bounces, given the significance of the sell-offs, and we're only modestly higher in here, between 0.2, 0.3, 0.5% higher on the European bourses this morning. Okay, Fed tool, quick nod to it. This has been hovering around here, right? It's not 50-50. There has been more of a chance of a 75 at the November meeting, but it's kind of stabilized around this kind of 40-60 kind of area. Between 30-70, 40-60 is where it's stabilized. So the market kind of indecisive, really, but more of a chance of there being that 75 basis point rate hike next. Okay, let's take a look at some of the charts. I'm just going to concentrate on the S&P and the Nasdaq in here today. Unless anyone wants to pop in, if you are wanting me to go on to gold and oil, please do pop it in the chat. It's below the video, the streaming video. You can take a look at it there. So where are we? We looked at these kind of potential breakouts. We did break to the downside yesterday. I just deleted that. So we did break to the downside. But interestingly in here, this is the S&P on the 30-minute. We held above the low in here. Okay, so we held above the previous low. If we go in here, we did get a low close. Okay, a low close for the S&P. But we didn't make a new low. It was an inside pattern yesterday. Okay, so interesting. Yeah, interesting. It was a new low. So I grabbed the headlines with a new closing low, but didn't break the previous low. However, go to take a look at the Nasdaq in here. We did make a new intraday low, and it was a new closing low for the year for the Nasdaq. And in here, if we go and take a look at the low 11,091.5. We eclipsed, we went through that 11,135 low from back in June. So the Nasdaq was the final index to give up the low in here. Are we at the point of a turning point though? The markets are kind of holding around these June lows, right? We haven't really looked. The Nasdaq's kind of, it's been choppy. It's kind of been choppy sideways, right? Choppy sideways in here. Is a low going in? Same with the S&P. Although we've breached the low from June, we're kind of been chopping around that low from June. It's hardly been a capitulation. Now you could argue that we should have broken this low and just accelerated lower, right? Well, we didn't do that. We're kind of chopped sideways. And the Dow is similar. I never look at the Dow. I should put up the Dow future actually. It's QQQ, right? What's the code for QQQ for Dow? Oh no, that's the thing. Anyone trade the Dow, guys? I don't look at the Dow on here. Oh, Tony wants gold. No worries, Tony. I can do that. What's the Dow? Oh, YMZ. I knew that. God, it's annoying. So here's the Dow. in here. So again, broke the June low some time ago, right? And then since then, kind of sideways choppy inside pattern again on the Dow. Thank you, Tony. Why I've got there in the end. I'm just gonna do that again in here. Cheers, guys. I never look at the Dow, but here we go. Yeah, so so even the Dow kind of far from aggressively negative in here. Let's go take a look at the intradays. I'm going to do on the 30 minutes in here. So we had this kind of a trend line that came in through here, right? That broke. It was kind of holding it. Boom. I had this one. I just deleted it off, right? But it was this one up here, and it was kind of tentative trend lines because it wasn't great because it come off that low there, right? But then it was kind of working in here because it was kind of working in here because it was tracking up. We were tracking up ahead of the open in here, but then obviously on the open, pretty much, or just before the open, boom, and then after the open, boom, straight down and through. So it broke that trend line and aggressively low. And if we extend this one out here, I'm just going to take that off and redraw it, do it properly. In here, if we now go here and draw it off of here, you can see we're flirting with that one now. We're flirting with this one. So this one come off this peak here, this peak here. Obviously, the more accelerated one that comes down through here, we've reversed that. So that's kind of interesting as well. And the market you can see accelerated when we reversed. So in here, you can see we were, here, this trend line here, flirting, accelerated once we finally properly broke, okay? And that is in like the overnight. Yeah, that's in European hours. That's basically from the European Open, we've done that. Now we're flirting with this trend line in here, okay? So potential in here, I mean, I came in, I'm still setting up negative, right? I don't see how you can come in and not be particularly, I've deleted the wrong one. I don't see how you can be particularly positive on these coming in each day and in any way looking for the turning point right now. But you know what? Today could be the day, particularly with the month end, but then again, month end, you would have thought the rebalancing is going to be. So I think these are my breakout levels now. You've already reversed this trend line. We're going to get rid of that. Yeah, so it's flirting with this one. And it's kind of holding above this one, but negative. I would say I'd rather play from the short side, but probably now waiting for the break below this trend line, this little counter trend line that comes up from the overnight lows, right? If it breaks down through here, back to the lows, and then it's testing this low and this low over here. Yeah, so that would be my setup on here. However, now I think, it's a matter of, it needs to get and hold above this trend line. And I think that's just a matter of, if it takes out that trend line, then it's quickly back to the overnight high. And then we could easily be back up to yesterday's highs. We could be able to go back up to, this week's highs up into here towards 37.30, 37.40. Yeah. So I think this trend line is important. I'll be watching this one. And then, the break or not. We've got the data now in, 38 minutes, 37 minutes. And then a post data. Then obviously we've got the cash market open. I'd be looking at these two as my breakout levels and having some kind of maybe filter on the upside one because we've been flirting with it as well. See, we've been flirting there. Maybe you need a better break, so it needs, it's kind of, each time it's broke, it's been like 2 to 3 points above. It probably needs 4 points above the trend line, to qualify it. And that probably then takes it above almost a high right here. So above 36, 36, the high is 93 and 3/4, 93.75. Okay. So yeah, that's how I'm looking at the S&P. Similar kind of, it's going to be similar in here. There's the lines we drew yesterday. There's the breakdown. It broke and boom, 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 boom. That's the end of that story. Eclipsed the low, the recent low, and obviously, as we said, we went down through the June low. Where we're looking at now, though, then I'd be redrawing these two in here, getting rid of that, and then I'd redraw this. Oh. And look, we're not quite there yet on this one. Yeah, we've been respecting it. So the Nasdaq is actually kind of looking less positive, more de facto more negative than the S&P because we're nowhere near. Remember the S&P is flirting with this this trend line here, and if we look at this little kind of counter uptrend line, we're already breaking down through that. So this looks more negative. And this has been kind of leading the way a little bit. So, coming into this, I still have to want to be short. If you look at my reports from the overnight, still setting up negative. And even that we've had the bounce this morning, I'm still setting up on the short side. But if these resistance levels start to go, quickly flip, this could easily go either way. I think end of month, end of quarter is going to be significant in here. Right. We've had no takers on oil. So Tony, for you and for the rest of the people trading oil, but for Tony particularly, because he asked and asked very nicely. Yeah, let's take a look at gold. So gold, I've been kind of clinging to a more negative theme in here, and there has been a positive correlation, obviously, between gold and oil to some extent. But I've been clinging to a negative, and you go look at my report. I'm still clinging to a negative. But the upside that we're seeing today may be changing that again. Okay, you had a big up day a couple of days ago. Yesterday, a dip and a bounce. I think if I go to my report, let me just try and go there without screwing everything in. Hopefully, you're not going to get the feedback. Let me see if I can open up the report in here. Oh no, it's logged me out. Let me quickly sign in. Let me see if I can get there without listening to myself, because we certainly don't want to have all that feedback. No, a little bit of feedback. Let me see if I can open up the report in here. Okay, I got it. There you go. Missed that feedback, Lou. Not too bad. So let's just I'm going to go in. So if you don't go in, this is in the if you go and take a look at this, it gives you some the levels in here that I'm kind of looking at. So here's gold. In here, so really, I'm clinging to a negative theme, but there's my kind of area in there, 1682.3/85, and obviously that there was yesterday's high. Okay, 1671.6, and then 1682.3, 1685. If we go back to the chart in here now, so overnight we've been up to where 1682.9, right? So we've gone right into my zone, right? We've gone right into. I want to get it right in here. This is the zone. These are the you can see I've labeled it here, 1682.3, 1685. That's where that was where I was going to change my view to go more bullish, right? And we've gone basically into that. No surprises to me that the market doesn't want to make a statement. So the high is 1682.9. So, don't want to pat myself on the back too much, but that area worked really well so far overnight, and it's failed. So you could have easily set up the short in there. However, it takes that out. I'm flipping to being bullish on this, right? So so now let's go and take a look at now. So here's the levels in here. These are the levels I've flagged, right? So there's your 16. This is where they come from, up here, yeah, and then up here, okay, and there's your 1680. Yeah, and these are the levels from here. Okay, this is where they come from, and it's kind of pipped into this area here and then fouled back down lower. Let's just have a look at some of the support and resistance to see where we might go now. Then, so it's gone right into that zone. So if you did set up short in there, you're looking happy. Obviously, we're tracing back lower, but I still think again, and with the high correlation, all of you guys should be, if you're trading gold, you should also be checking. Look, and we're breaking the trend line as well. So this is sell setting up negative. I think it's trailed higher. It's gone right into my resistance area and it's setting back. Right. If it takes out, it's taking out this. If it takes out this little swing, you've got a couple of little swings in here, Tony. So we've got 69.1. And then below there, 67.5. If it takes out these, then, I think there's another impulse move down here somewhere, these lows here, 1653, 1650. Yeah, so that's the risk, down through these little lows in here that I just shouted out there. So 69.1 and 67.5. Down through there, it looks even more negative. So I definitely, it's got into my resistance zone, failed in the resistance zone, coming out. So staying on the short side. However, if this all flips around, if equities start tracking higher, watch the data, watching the equity market watching the equity market open, then this could easily flip around to the other side. Where's the upside in here? Well, I did see, if you go back to the daily, yeah, you got this trend line coming down through here, right? So I'm going to try and draw that in here. This is going to be off probably the 15th of August and the 12th of September. Let's try and do that on the intraday, on the 30-minute. It might not work. 15th of August and 30th of September. Am I going to get all that data in? I might have to step out to the 1 hour chart just so we can see it. I'm going to need all of that there. Where are we? Okay, so it's going back to over here. So let me see how this works. No, it's not. It's too far away. We're going to get the trigger before that, right? And then we're obviously already through this one in here. We're through this already. Yeah. So yeah, I think to reverse it back to the top side in here, Tony, really it's back above my resistance zone that I've already flagged. I mean, if you're short on a trading stop, where do you get in closer in here? I'd be stepping if you're coming right the way in here, right? 5-minute chart now, you got the current downtrend. It's questioning that already. Look, it's really questioning the downtrend. So maybe you're getting cautious at the moment. I think it's a tricky one, Tony. I prefer to be short. Went into my resistance zone and failed. I set up a short in here this morning. That's what, from in here, bearish, see a downside bias for 49.41 area. And it's only bullish above 82.85. And we failed right at the 82.85 area. So still, looking for this to set up bearish. But it's failed once. I think, you're waiting for, if it gets back above, I would say here, 1675.6, definitely be cutting short and maybe venturing along back up to the highs. And if it takes out that upside zone that I just flagged, then this could motor to the upside as well. And again, month end, quarter end, etc., etc. Hope that helps. Tony? Hopefully that's helped. Right, I'm going to wrap it up there. I'm going to wish you all a great trading day as ever. I'm going to wish you a great weekend too. Watch out for those month end, quarter end flows that might hit the market. Helmets and goggles on. Who knows what's coming? And have a good one, guys. Take care. Stay safe.